Hi, Lenore here, and happy holidays. I want to give you a little bit of a lecture regarding the statement of cash flows. We'll be doing the indirect method, meaning that we will always begin our operating activity with net income. So let me type it in here for you. So net income. Oh, I can't even spell. There we go. And then the second piece is we're going to add depreciation expense. The reason for this is that we need to neutralize the effect of depreciation on net income. Depreciation expense, as you remember, is a non-cash entry. We debit depreciation expense and credit accumulated depreciation. So when we do the statement of cash flow, we need to neutralize the effect of any non-cash entry on net income. That includes a gain or loss on the disposal of an asset. Now this could be due to, excuse me, I just had a brain fart. This could be due to selling or the asset perhaps becoming obsolete, or we gave it to charity, some reason why we disposed of an asset. So again, this is all operating activity. In addition to beginning with net income, adding the depreciation expense, if we have a gain, we're going to reduce our statement of cash flows. If we have a loss, we're going to increase our statement of cash flows. And again, that's neutralizing those two effects on net income. In addition to those, we are going to show the changes for current assets and the changes for current liabilities. So we're going to take the beginning of the period and determine did the balance increase or decrease by the end of the period. So that is all operating. Investing, on the other hand, only includes long-term assets, activities of long-term assets. So did we purchase long-term assets? If we did, we're going to show it under investing activity. There's one more item that we include in investing activity, and that's the proceeds, also known as, I'm going to put AKA here, also known as the cash received from the disposal of long-term assets. Ooh, can't type today. So this is all investing. Let me make it all the same color. There we go. So the investing activity is any purchase of long-term assets in addition to the proceeds. That's what you hear it called in the real world, also known as the cash received from the disposal of long-term assets. Our final piece of activity is the financing activity. This will include any activity to long-term liabilities and changes to equity. So equity changes. So if you remember, issuance of stock would increase equity and increase cash. If we redeem bonds, meaning we paid them down, that would be cash going out. That would reduce cash. If we issued new bonds or new additional long-term liabilities, we would receive cash. The last piece of this is for the financing activity, cash dividends paid. If we paid cash dividends, we're going to show that under the financing activity. So, quick overview. Operating includes net income, depreciation expense, gain or loss on disposal of assets, changes in current assets and current liabilities. Investing activity is the purchase of any long-term assets. These are your equipment, your machinery, any item that's going to provide a value to the company for greater than 1 year, and the proceeds or the cash received from the disposal of long-term assets. And finally, the financing activity. Did we have any changes in long-term liabilities? That would include debt, bonds, loans. Did we raise cash by issuing new stock, or did we reduce our cash because we purchased treasury stock? And finally, cash dividends paid. So that's a real quick overview of the indirect method of the statement of cash flows. Lenore out.